Welcome to weekly view on markets. This week was pretty bad for the investors. Large cap stocks corrected more than 2.5% during this week, while small cap and mid cap stocks corrected 5% and 6%. Bank Nifty corrected more than 2.51%. This is a major weakness in the markets after a bull run of more than 2 years. The bull run started from June 2022. Technical charts have turned bearish, giving a trend reversal signal. So this week I am going to explain the charts in detail about the trend reversal pattern. More correction in the coming weeks is expected due to the technical trends which have reversed, coupled with weak quarterly two results of the companies. I advise investors to be patient and wait for the trend reversal again to invest a fresh capital. Till the correction is over, investors have to wait. And when again we get a bullish signal, that is the time to invest. Mutual fund SIP investors should not get worried. They should continue their SIPs as they will get more units at lower NAVs when the market corrects. I will post trend reversal in my weekly view and keep watching weekly updates in coming weeks. Now let us look at the performance of indices. Nifty closed at 24,180. It has gone down by 673 points, a correction of 2.71% the week. Bank Nifty has closed at 50,787. That is down by 1,307, correction of 2.51%. Mid cap index is at 55,277. It is corrected by 3,371 points. That is 5.75% correction. Small cap index is at 17,847. It is down by 1,229 points. That is a correction of 6.45%. India VIX has sharply climbed up by 12.19%. India VIX is at 14.63. This shows that the fear in the market has gone up and there is a fear in the market at present. Now let us look at sectoral performances. Almost all the sectors are in red. PSU stocks which have rallied for 2 years continuously have corrected more than 7.4%. Media stocks have corrected around 7.24%. Metal stocks have corrected 7.23%. Realty index corrected 6.97%. Oil and gas index corrected 6.21%. Consumer durables, manufacturing, commodities, auto sector, infrastructure sector, energy, all corrected more than 5% during this week. Consumption stocks corrected around 3.86%. FMCG sector corrected about 3.5%. Pharma sector corrected about 3.35%. So all the sectors were down. There was across the board selling, and it becomes very much necessary to look at the charts and the reasons why this kind of correction has come in the markets. This is the daily chart of Nifty. Here we can see market has continuously gone up from here, that is June 2022. Has after giving a run up, now markets have corrected. Markets has been making continuously higher tops, higher bottom for this entire 2 years. Now for the first time from the top, it has made a lower bottom, and again it has made a lower bottom and lower top, again further lower bottom. So this indicates a trend reversal, and this, if we look at the chart pattern, this is the shoulder, this entire thing is the head, and this is the second shoulder, and it has given a breakdown below the second shoulder. So this formation is called head and shoulder pattern, which is a bearish pattern, and target for this pattern is from the high of this head to the neckline, whatever this difference is there, that is this pattern is called a head and shoulder pattern, which is a bearish pattern. Here from the high of the head up to the neckline, this line is called neckline. The similar fall will be there. So as per this chart pattern, 23,500 is the target to which Nifty can fall as per the pattern, and at 23,500 we'll have to take a further review. And shall we invest at this point of time? No. It is like catching a falling knife. Let the correction be over, the Nifty will keep doing lower tops and lower bottoms, and at some point of time it will give a trend reversal, that will be inverted head and shoulder, that is called a bullish trend reversal. So now we have got a bearish trend reversal, and we have to wait for the bullish trend reversal pattern. When that pattern comes in, that is the point where investors have to invest. Now, if you invest at present, you will undergo through the pain, as market is still in the correction phase. This is a chart of Nifty mid cap index. Here too we can see a kind of head and shoulder formation. From the top we can see the chart has made lower bottom, then it has made a lower top. This top is lower than this. Then again has made a lower bottom. From making higher tops, higher bottoms earlier, the chart has started making lower tops, lower bottom. This is a trend reversal. And how much it can go as per this head and shoulder pattern? Nifty mid cap index can go down up to 54,000 from the present level of 55,277. At 54,000, we'll have to again take a review of the chart, and we'll have to see whether it will give any trend reversal or further correction shall continue. This is the chart of Nifty small cap index. Here too we can see this has given a trend reversal. After hitting a high here, it has made a lower top, it has made a lower bottom. Now this has broken below the lower bottom. The line connecting two lower bottoms is called the neckline. It has broken below the neckline. The downward target of 16,500 as per the chart pattern. Nifty small cap index can go down to 16,500 from the current level of 17,847. It had hit a high of 19,500. So we'll have to wait till this target is achieved or the reversal of the bearish trend. At that point of time, we can think of investing. This is a chart of Bank Nifty index. In Bank Nifty index, we can see the first part of the shoulder formation has happened. The formation of the head has happened, and formation of the second shoulder is in progress. But this has not yet given the bearish confirmation. When this line is extended and Bank Nifty falls below around 50,200 or around 50,000 level, that is the time. If further correction is there, it will close below this trend line or the neckline, and we'll get a technical confirmation of reversal of trend in Bank Nifty. Out of all the indices, it is only Bank Nifty which is having some kind of strength at present. Otherwise, all the indices and many stocks have already given trend reversal signal. Investors and traders have to take note of this and accordingly plan their investments and trades. Now let us look at some of the fundamental factors of the market. RBI forex reserves, after hitting 700 billion US dollars, has come down by 2.1 billion and it is at 688.26. The rupee has weakened and RBI, it seems, must have sold dollars in the open market to stabilize the rupee, because rupee has crossed 84 for $1 and RBI must have sold dollars. That is why we see reserves falling from 700 billion to 688 billions. But whenever RBI sells dollars, they make good amount of profit. RBI accounting system is based on first in, first out, wherein the dollars which RBI has purchased at 55, 60 dollars is being sold now at 84 rupees or slightly higher than 84 rupees. That is why RBI makes good profit. And dollar index is at 104.5. There is a overall demand for dollars across the globe. That is what is indicated by the dollar index. Because of the Middle East conflicts and Russia-Ukraine conflicts, gold prices and the demand for dollars are going up. Gold has hit 78,577 during this week, one of the highest levels in the recent times. FIIs continue to sell. They have sold 20,024 crore during this week, but the DIIs have bought 22,914 crores in equity during this week. DIIs are almost able to match FII selling. For the full month, FIIs have sold more than 1 lakh crores and DIIs have bought at around 99,000 crores. Why there is a sharp correction in the market? Because high valuation of the market is not supported by the earnings of the companies. Q2 results are coming now, and there was an expectation in the market that Q2 results of the companies will be good, but it is not so. The weak Q2 results have an adverse impact on the market, and also there is continuous selling by FIIs. The FII selling should have resulted in a major correction of 40-50% in the earlier times. But this kind of FII selling has no major impact so far because the DII money is coming into the market. It is almost equal to the FII selling. That is why market is not seeing major correction or crash. The correction is expected to continue because the Q2 result season is on. It will go on till 15th of November, and more companies are giving very weak results. Results indicates a revenue growth of 4 to 7 to 8% only, and decline in margins, and net profit growth of hardly 4 to 5%. At high valuation, the market expectation was that uh, profit growth should be at least in the range of 15 to 20%, whereas it has come in at 4 to 5%. This is a major reason for the correction. The correction is expected to continue to the next month, and we will have to wait for technical indicators and sentiments to improve. Keep watching my weekly updates. When there is a technical trend reversal, I will post that in my weekly view. That is the time investors can buy at lower levels. At present, investors have to be patient. It is good time for SIP investors in mutual funds, because as the market corrects, the NAV falls, and since they are investing every month, they will buy at lower NAVs. They will get more number of units, and when the market picks up, since they will be holding more number of units, they will get better profits. So SIP investors should not get worried about the market correction. They should continue their SIPs. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.